Hey everyone, Adam Simmons here from DgTl Infra, short for Digital Infrastructure. Colony Capital had another great quarter, with the stock responding positively after earnings, and the company continues to make new investments across all four sectors of digital infrastructure, including towers, data centers, fiber, and the combination of small cells and distributed antenna systems. In this video, I'm going to give you a quick overview of Colony's third quarter achievements, an update of how it's growing its assets under management, and dive a bit deeper into how Colony is using DataBank to tackle the growing edge computing investment opportunity. You might actually be able to make some money off of Colony's digital infrastructure investments because the company is publicly traded under the ticker CLNY. So stay tuned and I will break this all down for you. Before I do, be sure to subscribe to the Dgtl Infra channel and turn on the notifications so you don't miss my next in-depth video that is coming out soon. Now, let's jump into the video. So this is our second video on Colony Capital, and for those of you who haven't seen the prior video, Colony Capital trades under the ticker CLNY. Colony has a strategic plan and what is called the Colony 2.0 story that we'll get into now. Colony is transitioning from a diversified real estate investment trust, or REIT, managing real estate assets across many verticals, to a singular platform that is focused exclusively on digital infrastructure, which is cell towers, data centers, fiber, and small cell infrastructure. In Q3, Colony signed an agreement to sell its hospitality business, achieving positive equity value for Colony shareholders despite the pressures faced by the hotel sector today. So if you look at the left side of the page, Colony signed a transaction worth $2.8 billion, which will reduce its consolidated debt by $2.7 billion and remove the distraction from this non-core asset so that the company can focus on its digital business, which you can see from the right side of the page. And this transition is exemplified through Colony's portfolio company, DataBank, acquiring Zcolo for $1.4 billion in the past quarter. The Zcolo acquisition transforms DataBank into a national-scale edge data center operator, with 29 Tier 1 and Tier 2 markets, 64 locations in total, and a tripling of the company's footprint across the United States. In addition, the cross connects at DataBank will grow from 7,000 to 30,000 cross connects once the Zcolo transaction closes. And cross connects are particularly important for reducing latency, which we'll talk about later in our edge computing analysis. So Colony financed a portion of the Zcolo acquisition with $145 million of Colony's balance sheet capital, and therefore Colony is able to maintain its 20% ownership stake in the company. Additionally, Colony is bringing in $500 million of new co-investment capital, which pays Colony fees and carried interest. And finally, on the debt side, Colony was able to secure $600 million in debt financing to support the acquisition. So what the left and the right side of the page are meant to show is that Colony is harvesting its legacy assets such as hospitality and reinvesting proceeds as well as new third-party capital into the digital side of its business, shown by the right side of the page, and specifically the DataBank and Zcolo example. So this page really provides an update of all of the key actions in which Colony took during the third quarter of 2020. It's broken into 4 different columns, and I'll touch on some of the most pertinent points to Colony's continued value creation as a company going forward. So starting with the leftmost column and looking at the second bullet, this is the strategic Wafra investment and is one of the most important things that's happened to the company during 2020. So in July 2020, Colony formed a strategic partnership with Wafra, which is an investment firm backed by money from Kuwait sovereign wealth funds in the Middle East. Wafra made a minority investment in Colony's digital investment management business worth 31.5% of the management fees and carried interest generated by that business. Wafra will also fund $130 million into certain of Colony's funds going forward. So first, there's the main fund, Digital Colony Partners Fund 1, which is the current fund which Colony is investing out of. And of that $130 million, Wafra is contributing $60 million of the total to that Digital Colony Partners Fund 1. The remaining amount of that commitment will be split between Digital Colony Partners Fund 2, which is the next fund that Colony is currently out in the market raising, and then Colony's new Digital Credit Fund, which will lend to businesses in the digital infrastructure space. So as opposed to being an equity investor, Colony's credit fund will make loans to tower companies, data center companies, fiber companies, and small cell companies. And this will be the new strategy for Colony Credit Real Estate, which trades under the ticker CLNC. In addition to that 31.5% stake in the digital investment management business, Wafra also received 5 warrants to purchase up to 5% of Colony Capital shares. The warrants have 5 staggered strike prices of $2.43, $3, $4, $5, and $6 per share for each warrant, and they're exercisable until July 2026. So although this may be a far date and the strikes are staggered, we can really gain insight into how Wafra thinks about the value of the company. So if we look at the final strike price at the furthest date out, Wafra's warrants would all be in the money if the Colony stock price reaches above $6 by July 2026. So that gives you some perspective about what another investor thinks is reasonably achievable in that time frame. Now, for these warrants and the 31.5% stake in the digital investment management business, Wafra paid consideration for its investment of $284 million. And that's comprised of $254 million in cash and then contingent consideration of $30 million, which is to be paid only if the run rate EBITDA of the digital investment management business is $72 million or greater by December 31st, 2020. So overall, Wafra's investment implies an $805 million valuation for the digital investment management business of Colony Capital. And if we try to put this valuation in the context of a multiple, we take the Wafra valuation of $805 million and we look at Colony's Q3 2020 digital investment management business, which generated $8.9 million of fee-related earnings on a quarterly basis, which equates to $35.6 million on an annualized basis. And therefore, the implied multiple paid by Wafra for Colony's digital investment management business was 22.6 times fee-related earnings. So that's a strong multiple for a business which is still growing and has tremendous runway. And so I wanted to highlight that that was an important exercise to go through because the digital investment management business is really the future of the company. And as Colony sells off more and more legacy real estate, more and more value will be ascribed to this digital investment management business over time. So continuing on with the page, if we move to the middle left column, the second column on the page, it's worth highlighting the $200 million Vantage Stabilized Data Center Portfolio, known as Vantage SDC investment. So in October 2020, Colony, alongside third-party capital, invested $1.36 billion for a 90% equity interest in Vantage Data Centers portfolio of 12 stabilized hyperscale data centers in North America. Since this was a 90% equity purchase, it implies that Vantage SDC overall was valued at $1.5 billion. Colony Capital's balance sheet investment into this is $200 million, representing approximately a 13% ownership in Vantage SDC. And this is an important transaction to highlight because Vantage SDC is Colony's second significant balance sheet investment after DataBank in a digital operating business. So really, again, demonstrating that the rotation is underway from legacy real estate to digital infrastructure. So staying in the middle left column and moving down, we see Colony highlighting that DataBank bought Zcolo for $1.4 billion. And we made a separate video going into detail about this transaction, which was called Big New Data Center M&A, What Does It Mean for 5G, which I'll link to above and below. And because of that video, I won't go into the details about that transaction here. Next, moving to the middle right column, we see Colony highlighting the hospitality sale, which it made for $2.8 billion. And again, we discussed this in a separate video as well, which was called Colony Capital, Mark Ganzi, and Digital Infrastructure, which I'll also link to above and below this video in case you want to learn more about that transaction. So moving to the rightmost column, the key point here is that first one, $2.3 billion of net FEEUM raised year to date. And we'll get into exactly what that is on the next page, which shows you in a bit more graphical detail and makes it easier to understand. So as of the end of September 2020, the entirety of Colony, including legacy real estate and digital investments, had $46.8 billion of assets under management. Of that total, only $23.3 billion of it was dedicated to digital infrastructure. A portion of that $23.3 billion takes the form of balance sheet investments, which we'll exclude, and brings the number down to $22.2 billion of total digital assets under management for third parties. And you can see this at the top left part of the page under the column AUM CLNY OP share, where at the bottom for the total digital investment management business, the number is $22.2 billion. But of this $22.2 billion, only $8.6 billion of it generated fees. And therefore, what's known as the digital fee earning equity under management, FEEUM, FEEUM, was $8.6 billion at the end of September 2020, as seen by the column on the page that says $8.6 billion at the end of September 2020. So from my perspective, it's a little bit strange to see a company which only has about 38% of its assets under management be fee earning. And this is primarily driven by a few different things. So if we look at the dashed red box, we can see that the discrepancy between total assets under management and fee earning equity under management is primarily driven by separately capitalized portfolio companies, which is the former Digital Bridge portfolio companies, and co-investment sidecar capital, which is that third-party capital that is brought into some of the larger transactions. So in summary with this point, it means that a significant portion of these capital sources do not have fee-paying limited partners as capital. They have limited partners, but they just don't pay fees. If you want to have more background about this specific topic, we discussed this in a separate video as well, which was called Colony Capital, Mark Ganzi, and Digital Infrastructure, which I'll link to above and below as well. But let's just reference this chart quickly so that we can understand how Colony has grown its fee-earning equity under management in the year-to-date period. So at the end of 2019, Colony had $6.8 billion of fee-earning equity under management. $700 million was added through the acquisition of Zayo, which you see as the second orange bar. $310 million of third-party co-invest capital was added for the acquisition of Vantage Europe, which you see by the third bar. $600 million of third-party co-invest capital was added for the acquisition of Vantage SDC, which we spoke about earlier, and you can see as the fourth bar on the page. And that gets you to the $8.6 billion number we just referred to. And then the final column, the pending net fee-earning equity under management, comes from DataBank, and specifically third-party co-invest capital that relates to its acquisition of Zcolo. So another $500 million is expected to come in between now and the end of the year related to that transaction, bringing total fee-earning equity under management to $9.1 billion in sort of a pro forma state. Colony is likely to announce further acquisitions between now and the end of the year, so the expectation is that $9.1 billion number will in fact be even higher by the end of the year and when Colony announces its Q4 earnings in a few months. So one of the key themes which Colony is investing towards, and is particularly exemplified by the DataBank and Zcolo transaction, is what's known as edge computing. And Colony thinks there's a tremendous opportunity, which we'll get into through these diagrams and further along in the video as well. So starting with the upper left quadrant, compute have continued to grow rapidly over the last 10 years. And what has been underappreciated is the exceptional growth in demand that is yet to come. In the next 5 years, artificial intelligence systems will move out of the test rooms and Internet of Things applications will be deployed. Machine-to-machine communications underpins use cases for artificial intelligence, for the Internet of Things, and for cloud computing, which will cause further demand for compute or data center capacity to rapidly increase. If we move from the top left quadrant to the top right quadrant, we ask the question, where does this demand for compute come from? And increasingly, it is coming from what's known as the edge, and that has never been more prevalent than it has been during COVID-19. The edge is mobile and is relevant for the consumer and enterprise customer to interact with the network in real time. The edge is not a short-term trend, but is rather a multi-decade cycle. So compute will migrate from centralized computing back to a distributed computing model at the edge of networks. Moving then to the lower right quadrant of the page, that shift to distributed, decentralized computing is already forcing changes in the network architecture. So as new use cases require lower latency, faster speeds, and better device efficiency, the new applications do not have time to send all their data back to a central location, because this would increase latency far too much. Instead, the data has to be processed in real time, which means compute resources need to be close to the end user. And bringing those compute resources close to the end user is really the true definition of the edge. Finally, moving to the lower left quadrant, ultimately, these trends will drive strong growth in edge server deployment. So as this chart highlights, over the next 8 years, edge servers will support 10% of cloud workloads globally, which is an increase from just over 1% today. That translates into over 1.5 million servers sitting in edge data centers around the world. In turn, this edge opportunity is a significant growth driver for Colony's portfolio companies, including DataBank and the transformative acquisition it made with Zcolo. So edge computing is in its infancy, and it is truly difficult to visualize what edge computing looks like, but let me try to provide 3 different groupings of edge compute to help you better visualize the different forms in which edge computing can take. So the first type of edge compute is found in CRAN hubs, which CRAN being short for Centralized Radio Access Network or Cloud Radio Access Network. So these CRAN hubs are the marriage of mobility and applications moving closer to the edge of carriers' networks, those carriers being AT&T, Verizon, and T-Mobile. By moving applications closer to the edge of carriers' networks, it is ultimately reducing latency by being closer to the end customer of the carriers and thereby enhancing the customer experience. If we think about Colony's role in CRAN hubs, Colony has 680 CRAN hubs owned, built, or managed, which are hosting edge compute, and has been active in the space for the past 3 to 4 years. Additionally, you can see this with the different carrier partnerships with the largest cloud computing companies. So AT&T has partnered with Microsoft Azure, Verizon has partnered with Amazon Web Services, or AWS, and T-Mobile has a number of different partnerships which they haven't publicly announced yet. The second main vertical of edge compute takes the form of a company like DataBank, where it is building data centers in Tier 2 and Tier 3 markets, so not the core city center locations that are known as Tier 1 locations. DataBank has some of these data centers in markets like Overland Park, Kansas, Plano, Texas, and Bluffdale, Utah. So these are periphery markets inside of large cities where workloads are shifting further out towards the suburbs. And for example, COVID-19 is driving increased demand for these edge facilities, and thus bigger workloads are shifting to the edge. And the reason for this is because you have fewer people working in city center office buildings and more people now working remotely from home, and often those homes are in the suburbs. So the opportunity with a company like DataBank is to continue developing these edge facilities because it fits nicely between core colocation facilities in city centers and massive hyperscale facilities from the likes of Amazon Web Services. If we think about the type of workloads that go into these edge compute facilities for DataBank, they fit in that gap of about a 0.25 megawatt to 1 megawatt of power capacity. Finally, the third type of edge computing is what's called a container business model. And this is where edge computing companies are really partnering with the tower companies like American Tower, like Crown Castle, and like SBA Communications. But if we stay with Colony Capital as an example, Colony owns the fourth largest tower company in the United States called Vertical Bridge. And Vertical Bridge has partnered with 3 different companies to test putting smaller container-based edge compute facilities closer to the cellular tower. And so of the 3 business models we discussed, between the CRAN hubs, the DataBank model, and the container business model of tower companies and Vertical Bridge, it's really that tower company and Vertical Bridge model that is the most unproven to date. So now let's move into a specific example of how Colony is investing in this edge strategy through a company called Edge Presence. And we'll touch on this briefly here, but if you want to read more about this investment, you can visit us at DgtLInfra.com and check out the article, DataBank Moves Closer to the Edge with $30 million investment in Edge Presence. So during Q3, DataBank announced that it had made a $30 million strategic investment in a company called Edge Presence, which is an owner and operator of multi-tenant modular data centers providing space, power, bandwidth, and interconnection across key United States markets. Edge Presence's edge data centers are modular, purpose-built data centers comprehensively and compactly designed. These facilities include critical power, monitoring, physical security, and cooling. Specifically, these data centers are situated in targeted locations at the base of cell towers. And so Edge Presence's edge data centers enable DataBank to co-locate its customer workloads at what's known as the far edge to further reduce latency and improve performance for select applications. And this modular capability of Edge Presence really complements and expands DataBank's edge strategy. So in summary, DataBank overall is a story about executing on the next generation of converged networks. The zColo acquisition gives DataBank a scaled national footprint with on-ramps to global internet traffic, and Edge Presence and their modular data centers located at the base of cell towers give DataBank access to what's known as the far edge. These are both really important deals that sync DataBank's profile with the demand for edge computing. Edge Presence is also partnering with Vertical Bridge, one of Digital Colony's other portfolio companies, to deploy their micro data centers at the base of Vertical Bridge's towers. Edge Presence already has data centers at 12 Vertical Bridge locations, and Vertical Bridge has towers in 9,000 locations across the United States, really showing the potential to scale this relationship in the future. So finally, we wanted to leave you with this summary of what Colony Capital owns, because it can often be quite difficult to comprehend which companies Colony owns and also where they sit in terms of its capital structure. In total, Colony's companies operate and manage 350,000 tower sites. And just to note, those are not technically all towers. but rather some other types of communication sites like on rooftops of buildings, for example. Additionally, Colony owns over 95 data centers globally, over 140,000 route miles of dense metro fiber, and over 40,000 small cell nodes. So clearly, Colony is playing in the four key verticals of digital infrastructure, being towers, data centers, fiber, and small cells. And this page really helps to exemplify what those companies are, when the investments were made, what specifically they own, which vertical they fit into, and then as you see from the bottom part of the page, where they fit in terms of capital source. So for example, certain of Colony's older investments will be categorized under DigitalBridge, or what is known as separately capitalized companies. And as we move forward in time, more and more of those newer companies are actually housed in Colony's new flagship fund called Digital Colony Partners Fund 1. If you want more detail about what some of these companies specifically do, we discuss each of these companies in detail in a separate video as well, which was called Colony Capital, Mark Ganzi, and Digital Infrastructure, which I'll link to above and below. So hopefully you found this video helpful. If you did, then please share it with somebody you think might also find it helpful, and consider subscribing to DgTl Infra, and visit us at dgtlinfra.com for more of the latest news on digital infrastructure. Thank you for watching this video. Be sure to like the video and post in the comments telling me whether you agree with Colony that edge computing will be a significant growth driver in the years to come. Thanks again for watching, and I'll see you in the next video.